Good day. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up. And this wrap-up is for Wednesday, the 20th of May, 2020. And we're right now 5:50 in the afternoon, so the markets have all been closed for quite a while. I'm late on this. Had to do house errands, you know. When we're all stuck at home, you know what goes on every now and then. And I've been pretty good about getting these out way earlier. Can't do anything. I like to do the end of the day wrap-ups, though, after 5. I was on time for my subscriber video. And by the way, on my subscriber one, if you're not doing that, I'm adding more and more charts all the time. I had today a call from a gentleman that wanted me to put into those charts the Canadian gold miners, one of his favorites. Got the feed for it. That's in there now. You know, we brought in the high yields. Those are in there now that the Fed is buying. We have UNG. I keep adding. I want to get up to about 40 charts at a time into that morning video. So I keep adding them, and I will continue as time goes on here. And quicker rather than later. And as you can see, another day of green. You know, I feel like I'm in a deja vu of 2009. Nobody wants to believe this market's going to keep going up. It keeps going up. We keep hearing that the bad economics are yet to hit us, and I know they are. I'm certain they are. But how much of it is discounted, I don't know. But as you keep climbing, eventually you get to a point where getting back down to certain lows, well, you got to throw those ideas out. You can get corrections, but not necessarily down to new lows. And I think that's where we're going right now. I have to see how deep we can go when that next wave of bankruptcies are going to hit, when we run out of this money, that the payroll money that was given by the government, and people don't get hired back, just what happens there. We certainly have problems. I saw that they opened a GM plant, and immediately someone had a COVID case. They had to shut it down and clean the plant, but the next shift did come in. Restaurants, they're getting innovative. I know in Chicago they gave an all clear to open a number of restaurants, first time by the way, and they're going to do this by opening streets, in other words, closing streets and letting, because the weather's going to be better, outdoor seating. We have that all over the city in cafes, but they're going to close some streets. It should be interesting as the plans come out. Our lakefront is still locked down. We'll see what the mayor comes up with. But I mention all this not to be a news person to you, but that's what this market's feeding on. The market is feeding on the good that we're hearing. The market today, well, actually yesterday it heard about, you know, the setbacks that people think are going to happen in some of these virus campaigns. I happen to be one of them that unfortunately is in the camp that until it's here, it's not here. I'm fearful that 100 million people are in shut-ins again in China. I'm fearful that the COVID cases there have gone up. I'm fearful that Texas cases where they've opened the state have shooting up. Florida coming up again. Not dramatic, but we have to see what's going to happen. As we come over to the tech sector, this is the powerhouse market. This is what has led the rally. This is what's got all the fanfare. This is where the earnings are coming out that are strong as can be. So if it's in tech and people have used it at home in any manner, this is what's made this market move. There is a gap in the chart. Maybe it gets filled on a correction. That's what I would expect. It's not that far away from here. What's the trend? Up. You still have this pattern of higher lows, higher highs. Market keeps grinding its way higher. We are over the key moving averages. You did have a challenge of them right here. The risk would have been breaking under this low that I'm pointing at, which is also where the 18-day average was then. Now the market's away from it. So where's the resistance in the market? Well, you're riding it. You're fighting at the upper Bollinger Band. Now, when you hit a Bollinger Band, there's two things that generally happen. Generally, you turn away from it. But when a market acts like glue, in other words, it hits it and it doesn't want to break away, that's a very strong signal. And what that does is you're looking to see, do the slow stochastic studies lock in with it? So on the slow stochastics, they haven't. They're just overbought. So it's similar to this event where the market came up and maybe we get a bit of a break in front of Memorial Day. It's very possible. Today's Wednesday. Traders like to lighten up. They don't like positions over holidays. Obviously, COVID-19, we've been on holiday for 2 months, so I don't know what that means to everybody, but that is the truth. When we look at SMH, you can see the market is fighting at the upper Bollinger Band. We have a pattern here where you're looking now at higher lows, higher highs. So I have to take this away, put it pointing up here, and I wanted to show you that because now you've got the right pattern. You've got bullish market here. Now, if this market can close over the upper Bollinger Band, that number is 140.64, and it'll be higher tomorrow most likely. If it does it 2 days in a row, I consider it a breakout to the upside. And I know you're going to say to me, Ira, how could that be a breakout? Look where you're at. Why not? Why not go for the old highs? That can easily happen. As we look at the industrial sector, well, we know that the factories are reopening. We know that industry's picking up. And you can see the market's now found a bottom at the lower Bollinger Band a week ago. It's been just waffling back and forth. It is overbought. The pattern is a higher high and a lower low. I just see it trading in those bands. In the energy sector, the market's had a heck of a run. I mean, you got to use your head sometimes. You honestly think you're going back to $40, $45 on this run? If you do, stay with it. My work is saying, be careful right here. At that upper Bollinger Band, you've had a heck of a run. The market is in oil nearly doubled in price. In fact, let's throw out, and I think you have to do that. You have to throw out that negative $40, but you're back up into the $32, $35 area. So you can say that from that $12, $15 range, you've come up very strong. You've certainly doubled in price from that. You're overbought. Now the question is how much demand? Well, we will see more. If you look out your window, if you look at a highway in your neighborhood, there are more cars on the road than there were 2 weeks ago. And it keeps picking up. Now, we don't have traffic jams yet. We're certainly not at that point. But the fact that we're using more and the fact that we saw the EIA and the API numbers come in flat, basically, we're not building stock. And in Cushing, Oklahoma, we did take out 5 million barrels out of storage. That freed up some storage space there. QQQ, this is the powerhouse, just like XLK. You're back up, you're running the bands, you're overbought. I'm not going to try to pick a top. When it peaks, it peaks. I'm still looking in this very similar to what we saw in XLK. To back off at some point here, just the weight of gravity, no more than that. The emerging markets, well, this is an attempt to see if they can push through the upper band. If they do, that's a pretty good sign for them, if they can hold it. Today, you closed 57.78, you got to 58.05, so that means you got over the upper bands, you could not do it. So I think the pros are being thwarted right here. I think they got it there too. So I think you're still very much stuck in this band. Breakout, I'll review what I think to do next. In GLD, I am looking for resistance right here. You are up against the upper Bollinger Band. So in the futures, I saw that the market stalled there again today. This is not a bear market, this is a bull market. It's overbought. It could at any point correct a bit, but I think it's going to be very well supported on breaks. As we know, there's going to be more relief coming. There's more people thinking, where's all this money coming from? There's fear in these markets. Now, the Bank of England today, for the first time, said they may go to negative interest rates. You realize when you do that, if you put your money in the bank, they're going to charge you. They're going to charge you to hold your money. Today, I was looking at some of the bonds that were sold in Germany, and there was a large amount. Negative 0.47. So you're paying the government to take your money. You're not going to earn any interest. You will get less back than you paid. You can see right up here, you're fighting that battle in the gold miners. Now, what has happened is more important here. If we look at the numbers, both numbers are over 80 today. They were over 80 yesterday, over the day before, but not the day before. When you get 3 sessions in a row where you close over 80 on both numbers. It's called embedded, locked in, however you'd want to term it. Until the red line closes under 80, I say the pros will buy the breaks now, looking for the market to keep coming up. I still look for resistance in that Bollinger Band area, but if you get good breaks in there, that's where I'm expecting the pros to show up. TLT. We have a pattern of higher high, higher low. The market is just sort of drifting right here in an oversold area. Any reading that is under 30, either number in the slow stochastics, means you're oversold. You'd have to close back over 165.82 to get bullish. To turn the trend down, you've got to take out 162.42. That'll almost put you right into the lower Bollinger Band where I'd look for support. In FXE, the euro, I've been looking for a challenge, and I've mentioned this day in for you, that I thought if the market can get up to the Bollinger Band, that's where I think the pros are going to take money off the table. You hit that, you hit the 100-day average too, and then you came back and you closed under both numbers. So that's where I think the pros are stepping out of this market temporarily. You've got a pretty big band here. I'm not saying you can't go higher. This market is run because people think, and I think rightly so, that you're going to see relief packages come for the weaker countries that make up the Eurozone, but there's a number at which you start running into technical resistance, and that's it. So you put it together, you try to come up with game plans, and that's one of the things I do. So if you're looking to find out more of what we do with our subscriptions, go to our website, www.iraepstein.com, under research. You'll find out everything there. If you'd like to take my charting course, go to the education area. It explains it. I've made videos that explain all this and how they work. I'm Ira. You have a good day.